Are lagging indicators making you miss opportunities? Poor stop losses amplifying your losses? The ZLSMACE strategy brings together zero-lag smooth moving average and Chandelier Exit in an innovative way, precisely catching trends, starts, and dynamically managing risk. Designed specifically for high volatility markets, let us explore how mathematical innovation can boost your trading performance. Welcome to the Inventor Strategy channel, where we bring you the most hardcore quantitative strategy decodings. The high volatility of crypto markets presents traders with two core challenges. First, traditional indicators often miss the best entry points due to their lagging nature. Second, lack of scientific stop-loss mechanisms can easily amplify losses. The ZLSMACE strategy is designed to solve exactly these two pain points. It uses the innovative zero-lag smooth-moving average to reduce signal delay, while building a dynamic adaptive stop-loss system through the Chandelier Exit indicator. This strategy is particularly suited for medium to long-term trend following, aiming to respond quickly to market reversals and provide a solid technical foundation for trading decisions. The goal is to strike a balance between capturing opportunities and controlling risk. The core of this strategy lies in the clever combination of two key indicators and their innovative application. First is the zero-lag smoothed moving average, or ZLSMA. It dramatically reduces the lag of traditional moving averages through a unique double linear regression calculation method. The calculation process of ZLSMA shows brilliant mathematical design. It first performs linear regression on price data to get the first result, then performs linear regression again on this result to calculate the difference between the two regressions. This difference actually quantifies the lag degree of linear regression itself. Finally, it compensates this difference back to the first regression result, giving us the zero-lag smooth-moving average. This innovative method of double regression, plus difference compensation, fundamentally reduces indicator lag from a mathematical perspective. This makes ZLSMA able to reflect price changes, almost in real time, effectively solving the problem traders often face of missing optimal entry points. Second is the Chandelier Exit indicator, which dynamically adjusts stop-loss positions based on ATR volatility, automatically adjusting protection range as market volatility changes. This method is usually better adapted to crypto markets than fixed stops. The strategy's uniqueness lies in organically combining trend judgment with dynamic stops. Trading signals are only triggered when the CE indicator direction changes, and the price position relative to ZLSMA meets conditions. This double confirmation mechanism helps improve signal quality. Additionally, the strategy uses a directional persistence mechanism, maintaining positions in favorable trends until clear reversal signals appear. This helps avoid cost losses from frequent entries and exits. Essentially, this is an improved strategy that recombines classic indicators in innovative ways, making their advantages complement each other while offsetting their weaknesses. Looking at the parameter settings of this strategy, we can see the technical foundation of the strategy construction. Parameter settings are divided into two core components. In the ZLSMA indicator parameters, length ZLSMA is set to 200. This is a long-term trend capture period that effectively filters short-term market noise, focusing on capturing main trend direction. The offset ZLSMA parameter represents the time offset processing parameter. The source ZLSMA uses closing price by default. These parameters can be flexibly adjusted according to specific trading timeframes. Day traders might need shorter ZLSMA periods, while long-term investors might choose to maintain or extend this setting. In the Chandelier Exit indicator parameters section, length EC is set to 14. This is the standard period setting for calculating ATR, performing stably in most market environments. The Multi-CE parameter is the ATR multiplier set to 2, which determines the sensitivity of the stop-loss line. A larger multiplier gives price more room to fluctuate, reducing false triggers in choppy markets, but also means potentially accepting larger drawdowns. Use close CEE is set to true, meaning it uses closing price rather than extreme prices for calculation. This choice helps reduce unnecessary impact of price spikes on stop-loss lines. These carefully calibrated parameter settings provide the strategy with adaptability and stability across different market environments. The technical core of this strategy is reflected in its precise indicator calculation implementation. This shows the complete transformation process from theory to practice. The ZLSMA indicator code implementation strictly follows its mathematical principle. First, it uses the linear regression function to perform linear regression on price, getting LSMA ZLSMA as the first regression result. Then it performs linear regression again on this result, getting LSMA ZLSMA. Next, it calculates the difference between the two regressions, EQ ZLSMA, representing the lag degree of linear regression. Finally, it adds the difference back to the first regression result, getting the final ZLSMA value. This implementation ensures the accuracy of the zero lag effect, making the indicator able to reflect price trend changes more timely. The Chandelier Exit indicator calculation also reflects the strategy's sophistication. It first calculates ATR and multiplies it by the set multiplier, getting the dynamic range of price volatility. Then it calculates long and short stop levels separately. The long stop is the highest price over a period minus the ATR multiplier, and the short stop is the lowest price plus the ATR multiplier. The data source for highest and lowest prices is determined by the use close CE parameter. The key point is that the CE indicator uses a directional persistence mechanism. When price moves in a favorable direction, the stop level follows and adjusts, but will not retreat in an unfavorable direction. This trailing stop design is well suited to crypto market characteristics, protecting existing profits while giving price sufficient room to move. The signal generation module of the strategy is the decision engine of the entire trading system. It captures market turning points through carefully designed conditional logic. In the CE indicator section, the strategy first initializes the direction variable direction CE, with a default value of 1 representing long status. Then it dynamically updates market direction through ternary conditional expressions. When the closing price breaks above the short stop level, it confirms a long trend. When the closing price falls below the long stop level, it confirms a short trend. If price fluctuates between the two stop lines, it maintains the original direction unchanged. This direction judgment mechanism effectively avoids frequent direction switches during market consolidation. It only adjusts market view when price clearly breaks key levels. The strategy then generates trading signals by comparing current direction with the previous period's direction. When direction changes from short to long, it generates a buy signal. Conversely, when direction changes from long to short, it generates a sell signal. This signal generation mechanism based on direction changes essentially belongs to trend following. It only triggers trades when the market clearly turns, effectively filtering out numerous noise signals in choppy markets. The signal generation logic embodies the core concept of the Chandelier Exit indicator, letting trends fully develop and only adjusting positions at clear turning points. The strategy execution section converts strategy signals into actual trading actions. This implements a complete trading rule system. The trading logic uses a double confirmation mechanism, significantly improving signal reliability. Long entry requires 2 key conditions to be met simultaneously. First, the CE indicator must show a long signal, meaning market momentum has shifted from short to long. Second, the current closing price must be firmly above the ZLSMA line, confirming price has broken through the key technical level. Short entry similarly requires the CE indicator to show a short signal and price to break below ZLSMA. The strategy designs a strict risk control mechanism. When the CE indicator direction changes, it immediately closes reverse positions. This design ensures timely stop loss or profit locking when market direction changes, preventing holding positions that go against the current market trend. It is worth noting that the strategy does not set fixed take profit or stop loss levels. Instead, it completely relies on the CE indicator's dynamic stop mechanism to manage risk. This dynamic risk management method is better suited to crypto market characteristics than fixed stops. It can protect capital safety while giving trends sufficient room to develop. The visualization and alert components enhance the strategy's practical usability by providing clear visual feedback and timely notifications. The strategy plots the ZLSMA line on the chart with a blue color, making it easy to identify the key trend reference level. The Chandelier Exit levels are displayed as green and red lines for long and short stops respectively, providing clear visual representation of dynamic support and resistance levels. Direction changes are marked with colored shapes on the chart, with green triangles indicating long signals and red triangles for short signals. These visual elements help traders quickly understand market conditions and strategy signals at a glance. The alert system sends real-time notifications when trading conditions are met, ensuring traders do not miss important opportunities even when not actively monitoring charts. Alerts are triggered for both long and short entry signals, providing the specific conditions that triggered each signal. This comprehensive visualization and alert system transforms the strategy from a theoretical concept into a practical trading tool that can be easily monitored and executed. The strategy shows differentiated performance characteristics in various market environments. In clear trending markets, especially during sustained bull market phases, the strategy can capture trend starting points earlier than traditional systems thanks to ZLSMA zero lag characteristics. It effectively locks in profits through the Chandelier system's dynamic stops. The strategy's sensitivity to upward trends is particularly outstanding. It can establish positions early in trend formation, avoiding missing most of the upward movement. Similarly, in clear bear market environments, the strategy's short mode is equally efficient. It can establish short positions when downward trends are confirmed, profiting from market declines. However, the strategy faces challenges in choppy markets. especially when price repeatedly tests ZLSMA but fails to form clear direction. This may generate a series of small loss trades. In such situations, strategy parameter optimization becomes crucial. In highly volatile markets, consider increasing ZLSMA period length and raising the Chandelier system's ATR multiplier to reduce false breakout signals. The strategy's main limitations in practical application include generating too many trading signals when price oscillates around ZLSMA and CLS indicator direction switching too frequently in choppy markets, leading to increased trading costs. To optimize strategy performance, consider these quantitative improvement approaches. Add minimum threshold filter conditions for price distance from ZLSMA, pausing trading signals when distance is below a certain percentage. Set cooling period mechanisms for CE indicator direction switches, avoiding frequent reverse operations in short time periods. This strategy innovatively combines zero-lag, smooth-moving average, and Chandelier Exit indicators, building a trading system that balances profit opportunities with risk control. From a strategy completeness perspective, the system builds a relatively comprehensive trading framework, including trend judgment, entry signals, and exit mechanisms, forming a closed-loop trading chain. However, the strategy lacks a dynamic position management module, unable to adjust position sizes based on different market environments and signal strength. This is an area worth improving for crypto markets. In terms of risk management, the strategy solves the limitations of traditional fixed stops through the CE indicator's dynamic stop mechanism. It can adaptively adjust protection range with market volatility, but the take-profit strategy relies too heavily on reverse signal triggers. This may lead to larger drawdowns in extreme market conditions. Regarding adaptability, key parameters like ATR multiplier and ZLSMA period have some flexible adjustability, enabling the strategy to function in trending markets with different volatility levels. However, adaptability in choppy markets still needs improvement. Understandability is one of the strategy's outstanding advantages. Despite using complex mathematical processing to eliminate lag, the overall logic is clear and trading rules are explicit. This allows traders to easily understand the underlying principles and confidently execute trades. Innovation is the strategy's biggest highlight. Zero-lag processing technology fundamentally optimizes the core deficiency of traditional moving averages from a mathematical perspective. Combining this with dynamic stop mechanisms creates a trading system that perfectly merges theory with practice. In terms of practicality, the strategy can indeed effectively capture major trends in actual trading, performing excellently in markets with clear direction. However, it needs additional filter conditions to improve performance in choppy conditions. Overall, the ZLSMACE strategy represents an exemplary case of innovative technical indicator application. By solving the lag problems of traditional indicators and providing scientific risk management mechanisms, it offers traders a theoretically sound and practically effective trading system. While there is still room for optimization in some areas, its core design philosophy and implementation methods deserve in-depth study and practical application.